Hey guys, what's up? What's up? What's up? It's very interesting looking at all the comments before I come. It's like I'm like the stalker who just keeps looking at all the comments before I come. So many people shouting at me, predicting I'll come late. Sometimes I do come late when it's not under my circumstances, but when I have the chance, I definitely come early, right? Someone's like he's not gonna come on live because less people. So the thing is, I don't care if there are more people or less people. I come for whoever's there. I do it and then I go. Simple fact. Jada sochne ka nahi, jada karne ka nahi. I'll just do my stuff and I will leave because people can come later and watch it also, right? So that's okay. So 30 seconds late, yes, 30 seconds late. It's very sad, very sad. Okay. Again, this is very spontaneous. I was just in the mood. I just finished one. I was doing a live for some college, I think in Delhi, um, and I was just feeling spontaneous because I had not done a YouTube. I had not come live on YouTube. Felt like forever because the last time I came live was before I left, which was on Friday. It almost felt like ever, even though it's only been like few days. It feels like ever, right? So yeah. Anyhow, I need a haircut. Yes, I need a haircut. I will get that done soon as well. Let me go back. So you will see. Okay. Uh, yeah, I'll get a haircut, dude. Calm down. I will. This weekend. So how's everyone doing? How's everyone doing? So let me give you some quick advice on what I've been doing. So I took a break for like 2 days over the weekend. I read a book in a span of 3 hours. My average speed is 80 pages per hour. The book that I read is this. Basically, if you can see it, inverted, not inverted, it's Coffee Can Investing. Now, the book is basically about financial literacy, financial independence, financial planning, but it is not, what do you call that, it is not exactly a lot of information on coffee can investing, right? So if you want, I can actually give you a quick introduction of how this works, and I'll tell you what I've been doing in the past also, or what I've been doing from like after reading the book, what happened to me. Do you want to do that? Yes, I am your Nikhil. You want to talk about what I've been doing after that? It's actually beautiful. Now, in the book, for all the people who have read the book, basically they say make a financial plan. Okay, simple fact, make a financial plan. Now, I don't know if you guys have made a financial plan or not, or have you even thought about financial planning, but I am not sure if you have made it. I definitely didn't make it. And then I said, you know what, I read this coffee can book. It talks about making a financial plan for rest of eternity. Let's make a plan quickly, right? So we'll do that. Let's do how to make a financial plan. Now, the most difficult thing here in doing a financial plan, let me tell you this, right, is to find a software that helps you do this. Now, usually people use Excel. I use Excel, but then I thought so in the book they actually give you a link to an Excel sheet that helps you make a financial plan, but that link sadly is not working, right? Um, so we're gonna do I found a link that actually does financial planning. It's a proper website, free, completely free, so you can do it whenever you're free as well. Manraj is saying create a new small case. Should I invest in your 5,000 now? Yeah, you can invest in the old small cases. A lot of people keep asking me the same thing, that can you invest in the old ones? Yes, you can, so don't worry too much about it. Okay, either which way. Now let me show you how to create a financial plan, and let me show you a website I found, which you guys might have heard of this. Have you guys heard of Capital Mind? You've heard of Deepak Shana, you've heard of Capital Mind. Now, if you go to Capital Mind's website, let me show you something. Okay, this is Capital Mind's website. Okay, basically, it talks about what is it? It talks about different portfolios. It talks about everything else. You can see my screen, right? Awesome. It talks about different portfolios. A lot of other things you can subscribe. That, I mean, I'm not doing that right now, but you can do all of this, right? Now, there's one thing that they don't actually tell a lot, and you know me, right? I keep going into each and every link to find out what's happening. There is something known as in tools called Financial Goals Planner, and it's called plan.capitalwealth.com, right? By the way, this is not promoted or anything for all the weird people who think it's promoted. Just watch this, because this is basically a lot of information with respect to financial planning, and we'll do one together. Now, my age is 29. I'll become in the next 12 days. I'm going to become 29. So my birthday is in the next 12 to 13 days. I'll become 29-year-old. So what I'm going to do is I'm change this to 29. Let's just make a random number. Okay, let's say 10 lakhs is what I've saved. At the age of 29, you should have at least saved 10 lakhs, or else God help you guys, right? Now read this properly. Okay, don't focus too much on the comments. For all the people, read this properly. uh, what is your average rate of equity returns? So average rate of equity return basically means over a long period of time, how much do you want to compound your wealth by? So if you invest only in the index over a 25-year Kager period, Sensex has given approximately 15%. So let's assume 15% and nothing more. Let's say we don't beat inflation. Sorry, we don't beat our Sensex, right? We don't beat the benchmark index. We are normal people who will get 15%. So you do something like this and say, okay, done, chalo, finished. Now go to goals. Now here is the game. Now let's talk about the goals, boss. Now the first goal is, you have five types of goals. One is retirement, education, holiday, purchasing something, and freedom. Right, now let me scare you guys a little bit about financial planning. Now if I'm at the age of 29, okay, let's say I have a goal that I want to buy a house of at the age of 40. Let's say at the age of 40 I want to buy a house. Now let's do that, right? I want to purchase a house. Let me change this to house down payment. Okay, assume I just want to buy a house and I want to do a down payment of this house at the age after 11 years. So I want to become 40. So I'll purchase this when I'm 40 years of age. And the item that I like to purchase costs, how much does it cost today? So I want to buy a house of say 2 crores, out of which I have to do a minimum down payment of 20%. But I don't like doing 20% down payment and taking 80% loan. So what I will do is I usually do 50% down payment and 50% loan, right? Because it saves me from doing a lot of nonsense. So if I want to buy a house of 2 crores, I need to save at least 1 crore by the age of 40. Okay. Cool. So 40, I have saved 1, 2, 3, 4, 5, 6, 7. Okay, this is 1 crore I'm saving. Till the age of 40, I want to save this money and I will buy it. Now, what is my asset allocation? I want 100% equity. I'm investing in equity and I'm keeping the inflation rate at 5%. Now, this is how it looks. Okay. Now, if I want to do this down payment on the house at the age of 40, I have to already start investing 47,500 right now. Right now, I have to start investing 47,000 to even be close to getting a house at that age. Got it? Mushkil hai na? It's tough. Now, someone saying in money has something similar dashboard. I don't know. I've not used in money to be honest. Yeah, so this is 47. Now, if I just tell this, I don't want 40, I want to buy it at the age of 50, see how it drastically changes to 19,000, right? And if I want to invest till this, barely anything. But I want to keep it at 40 and I want to keep this at 1 crore. And let's see how it works. Then you say, acha, house down payment ho gaya. Now, I'll have a kid who wants to go for higher education. Okay, eventually. Let's see this. Okay, higher education kid, say 1. Okay, I'm just giving you, this is how you should plan life, right? If I'm 29 and I get a kid in say 2 years, and then that kid will go for education at the age of 24, so I have 26 years to invest, right? 26 years to save up for this. So 26 years on 29 would be 45 approximately. And the college duration, I'll ensure that they don't go to US because okay, max keep it 2 years. So I'm going to invest till 48. And the college today, if it's US, it's easily 75 to 1 crore. So I'm going to keep it 75. College cost of college would be 75 total. So it would be 3,75,000, 37 lakhs 50,000, right? See, automatically kaisa watt lag raha hai mera. Automatically I'm getting screwed, right? All in allocation. So if it's just something interesting. No, this is so. Who Vinod is asking, what if the house price changes? This is the house down payment as of today. So automatically it is calculating the price of inflation at 5% and telling me what it will be at the age of 40. So don't worry, it's calculating inflation here. See this 5%. So it's going to automatically calculate at the age of 40 how much my portfolio value is going to be, because I'm going to buy something massively expensive. So my portfolio value is going to drop quite significantly here. So that is how it says. If I zoom out and just show you a zoomed out perspective, this is done, right? This is how my zoomed out perspective looks. Look at this. This is how my planning goes. Again, it drops down and it keeps going slowly. See how I'm rebuilding my portfolio again for a long period of time, right? Again till the age of 74. Now let's come back to another point, right? There's this very interesting thing that I read in the book, which said that you only earn money until the age of 65. You only have income until the age of 65, but you have expenses until you die, right? Which is, it hit me so hard, because you have expenses until you die, by the way. So that means, let's assume something, right? Let's say retirement planning I want to do. Every month at the retirement age, I want to spend 1 lakh as of today's rate. I spend every month, I want to spend 1 lakh, right? So totally 12 lakhs in a year. 1, 2, 3, 4, 5. I want to retire when I'm 65, because I don't think I can retire earlier. And I think I'll be alive till maybe 75, but let's keep it 80, because by chance agar zyada zinda ho gaya, to till 80 I need money, you know. and I can only earn in the start and I have to keep it till the end. And I'll start investing till 65 because I'm a hard worker. I'll work till 65. Okay. Again, aggressive allocation, full 100% in that. Okay, this is done. This is how I need 1 lakh to spend every time after the age of 65. So once I'm done with 65, I'm done. By the way, this I'll have to replicate into one more, because if you have two kids, then that's another issue. Now, one more thing that comes, which a lot of people don't know, which is car, right? Now, do you know this weird thing? Every time you buy a car, you can maximum keep it for 8 to 10 years. Uske baad you have to change the car, or else the service that you do on the car is quite expensive. So every 8 years you'll buy a car, right? If I'm buying a car every 8 years and I'm 29 right now, how many cars can I buy till I'm 65? So that's almost like 30 years, okay? And divided by 8, so almost 4 times I have to change a car, right? So 4 times if I have to change a car, and let's assume I just want to buy a car of say 10 lakhs. I'm not even keeping aggressive budgets. Knowing me, I want to buy a car of 10 lakhs, right? Let's say I want to buy a car of 10 lakhs. Okay, this is a car of 10 lakhs, and I want to purchase this item every 8 years. So if I'm 29 now, then I'll buy one at 35 because my car will become quite old by then. Okay, this is one, car number one. This is actually car one. Okay, then again I have to do another car at the age of another car, 4 cars like this, right? Keep doing one after the other, one after the other, one after the other, 4 cars. So when you do financial planning like this, right, you'll understand how much you need to save in a year. Every month you need to save to reach to this goal, right? And when you actually do that, you will see how your portfolio goes up and goes down. Now, have you seen one significant fundamental change here? Something's not right, right? For all the people who are seeing this, this is what it is, right? Here at this point over here, at the age of 38 to 40, because I'm buying a house, my entire net worth at this point at 1.96 crores is suddenly dropping down to again a small amount which I have to build towards my portfolio of the age of 75. I need so much money and then I will retire again. So see how this big house has actually dropped my money, right? Quite interesting. Now look at this. It says invest 56,000 per month and step it up by 5% every year, and you keep doing this, right? Now to make it more simpler, let me do something called as compound interest calculator. Okay, see this. The amount you can invest today is what I have. Say assume 10 lakhs. Amount I want to invest, what is this amount? 56,975. Let's assume 60,000 as an average of step up on a monthly basis, and I'm going to invest this number of years you want to invest for 30 years. Yes, 30 years. Number of years you want to stay invested till I'm 80. Okay, and I want to keep this for 30. Now, assuming the expected returns, I'm saying 15%, which is the benchmark index. Look at this. It shows very stupid, right? Look at the return. It says the returns is 10 billion dollars at the rate of 15% per annum. But that is actually true if you actually earn 10 billion dollars per annum. But then again, there's something known as inflation of 6%. So let's remove inflation from 15. It becomes 9%. It becomes 1,000 crores if you invest 60,000 monthly. Now 60,000 monthly is a very big amount, right? And this is assuming you don't touch this amount at all, and then you have tax, blah 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 blah. You don't touch anything. Let's remove tax also. Let's remove 1 more percent on tax. Make it 543 crores. See how 1% difference became 500 crores ka difference, right? Insane, right? So this is what it talks about. It basically says, Shashank, first make a plan. Okay, find out how much you need to invest, and then okay, there's one more thing that you need holidays. Every year I want to go international trip, at least one international trip of say a budget of 3 lakhs, right? That's me. You can have maybe a budget of 2 lakhs. So okay, and I want to do this holiday every year, and I'll take my first holiday bloody next year only. Why I have to wait for so long? And I want to take this till I'm 80 because I want to retire and keep traveling at the same time. But I'll keep investing till the age of 65, all in 5% inflation. Why 6 here? See, automatically it became 70 grand. You see how scary it becomes now slowly? You see how scary it becomes now slowly? Let me check retirement. It says my savings should last till I'm 80. Yeah, yeah, it's there till 80. See how scary it becomes. It's already 70 grand. This is not with me, not even adding more. This is me not even adding more. What do you call that? Cards and different other things. This is me being basic, right? I'm not even adding the other expense that the kid would give, the bigger house down payment. Now, if you remove the house down payment, everything becomes quite chill. But it's okay. 70 grand is not very big because tomorrow, when you keep earning and you become successful in life, you can do it. So again, whatever, the coffee can principle basically says that you start investing for a long period of time. Again, I'm not doing the whole video right now, I'll do it properly later on. But basically it says try to get at least 20% return on a year on year basis. And how does it do that? By just two things. It says take two things. The two things are basically, it says look at something known as ROCE. The ROCE is basically return on capital employed. Return on capital employed should be more than 15%, and your sales growth should be more than 10% every year on year. That is what coffee can principle says. Every year, if a company is growing by 10%, try to make it a B2C company instead of a B2B company. Focus on ROCE, which is 15%. You should get a good amount of companies in that year, and then you invest in that. And the principle says that why it's called coffee can is basically you invest in that, okay, and keep it for 10 years and do not touch it. Every year you'll get a new coffee can. So today, coffee can 2021 would be a set of particular stocks. Invest whatever you can in that year and then don't touch it for 10 years. It will give you very good returns, mostly 20% year on year. So I said, okay, boss, let me try this. Now, first of all, to do that kind of a screener was very tough. Okay, it was very tough. So I had to do two different screeners. Okay, why it was very tough? Because I have to find every year 10% growth and ROCE has to be around 15%. Okay, now it is tough. Now look at this. I did one on this, right? What I did here was I did sales growth of 10 years greater than 10%, sales growth of 7 years greater than 10, 5 years greater than 3 years, sales growth 10, then ROCE of 10 years, 7 years. Small cracks are there. I increase the market capitalization to be greater than 10,000 because I like companies that are greater than 10,000, but less than 50,000 because I don't want the ultra big companies. I want to invest in companies that become ultra big companies. Debt to equity ratio slightly lower, and also an average return on equity in the last 10 years average of 10%, right? Should be greater than 10%. So this is something I ran a query on, and that query showed me 17 results for this year. Okay, now these are not all correct. Then what I did, I went on ticker tape and I ran a similar screen as well, right? So what I did was I went here. Now I'll show you how to run it here. I don't think I saved it. That's so stupid. Okay, let me show you how it works, right? Let me say I want 10,000. Let me show you doing it live. 10,000 to 50,000 crore. Okay, I don't need this, I don't need this. Simple stuff. Okay, go to filter and just write AVG if I'm not wrong. Yeah, so I want 5 years return on equity, 5 years, where did that go? Yeah, return on assets, which is also ROA. This is also fine. ROCE, ROA, you can work on both of this. I want these two going up. What I also did here is I want a good cash flow also. I mean, you can I don't want to include cash flow for now, leave this, right? Now this is what I look at. These are the two things. Actually look at return on investment rather than return on assets. That seems better. ROCE is also there, but it's not 5-year average. Okay, this is something that you should do. Then there is something called valuation metrics. We'll just check if there's anything there. No, I don't want valuation metrics. Growth I want. Okay, this is nice. I want 5-year historical revenue growth. Okay, 5-year historical revenue growth. Yes. Should I not log in? Okay, I am. Okay, I want 5-year revenue growth historical. What you can also do is 5-year historical EPS growth. Smart, because little more better if it says EPS growth. That means shareholder value comes. I want cash flow growth. Let's check all of this and see what happens, right? So I've got the basic stuff down. I want to see if there is debt to equity ratio as well. Okay, for now let's leave it. Now see this. I want high ROE, which is 15% and above. I want high return on investment, which is also 15% and above, not 12. I want high historical growth, revenue growth of actually 10% instead of 15. Then we have high EPS growth. I wanted minimum 0. Okay, maximum whatever. Actually no, I want minimum 10% EPS growth. Why maximum whatever? And then high OCF growth, which is operating cash flow growth. I wanted again mid 10% actually, 10 to 100. Who cares? Okay, see automatically what happens. See the companies that have come. Now I got 23 companies here. I got 17 companies here. That means it's slightly different, right? Little bit different here and there. Now what I did, guys, now you think is very easy. It's not easy. Now what I did was I opened each and every share to check each and every share. Now I'll tell you why. First, can someone tell me from the chat? Can someone tell me from the chat what can go wrong with the screener, or what can go wrong with either this screener or this screener? Let me see who's smart here. Why will it not be accurate? Why will it not be accurate? The reason why it not might not be accurate is because of COVID. Because of COVID, there was a revenue slump that happened in 2020. Right, 2020 COVID happened. A lot of people who were making 10% average return slightly went down. Correct. Crash happened. So then they won't come in this. Right. So let's look at that. That's why you need to open each of them and go through them. Now, if you open, say, for example, Alkyl Amine, 21 crore, I don't care about this. I straight away go to profit and loss and see if the profit and loss is growing constantly or not. If the profit and loss is growing, does this look like it's growing 10% year on year? Yes. Because sometimes it can just directly grow in the last year and your Kager might get skewed. So it's always good to go see it one by one. So is it growing? Just put this down and see if it's growing almost by 10% year on year. Yes, almost by 10% year on year in the last 5 years. So it's definitely growing, right? Last 5 years, it's definitely growing. So let's keep this aside. I'm like, okay, cool. Now look at Gujarat State Petronet. Okay, let's go down. Now Gujarat State Petronet is not growing 10% year on year. Look at this. But it still came in our screener, right? It still came in our screener. So this is not good. So I automatically take this out. So aisa karke, and then you look at here also. Let's see Mindtree, right? If you look at Mindtree historical data, see this Mindtree it's again gone up right now. Why has it gone up? Is it going up constantly? Look at this constant growth, except for the last 1 year constant growth, right? Maybe what happened in the last 1 year? In the last 1 year, why did Mindtree go down? Even though it is an IT company and IT companies are booming, so something really wrong here. But previously it has gone up, and also I like to see EPS growth. EPS growth is happening, great. So that comes into the screener. So I keep doing. I did a lot of research like this, right? And you see most of the companies here are very strong companies who have done significant growth, right? If you look at this growth, beautiful growth, beautiful EPS growth, everything looks good. And one company that I was very shocked of, where did that go? It was there in one of the screener, was this company. Look at this one company called Poly Medicure, 8,500. So I reduced the universe from 10,000 market cap is slightly lower. Just look at this consistent growth performance in the last 10 years. Okay, look at the EPS growth, consistent EPS growth as well, good margins also. If you look at the Kager, it's 39% in the last 10 years, good compounding growth, good reserves, very less borrowings, uh, good ROCE of more than 10%, 15% every year, and good promoter holding also. So this was crazy, right? Are you catching my vibe? Are you understanding what I'm saying? So after doing all that, after doing all these small things, permutation combinations, I finally came to my coffee can, which was approximately around 22 shares. Right? Sadly, my coffee can came up to around 22 shares, and it's right. I think, where did I keep it? No, it's in my draft. One second. I invested it from my other ID, not from this ID. Watch list draft. Yeah, so finally I got like 10, approximately 22 stocks came into this coffee can. Uh, do you want me to show it to you guys, or do you want me to do it in a separate video later on? Do you want me to show it to you guys? Okay. Okay, if you guys want me to show it to you, I have 311 people listening. See how I'm going to blackmail you guys. You want me to show it to you? I want likes to increase. It's only at 99. There are 314 people. There's no likes. I want some likes. Give me some likes. I'll show it to you right now. What a live way to get likes. This is how likes go up, my boys. By the way, I realized something. A lot of people I don't think have subscribed, or I don't think have hit that bell icon on the subscribe, because today I didn't premiere a video, the health insurance video. I directly posted it. I didn't premiere it, and nobody came and saw that video, right? But when I premiere it, I get almost 1,000 views. When I don't premiere it, I get 500 views. So that means you guys are not subscribed and you guys are not clicking on that. Okay, I'll show it to you. I'll share the link also. Don't worry below. But again, this is only for educational purposes. This is not for you to buy or sell. This is only to look at. I don't think half of you can invest in this, because the size of this is 4 crores, 4 lakhs. The size of this is 4,52,000. Right? Yeah, no notification. So click on that bell icon. So this is basically 4,52,000 ka hai. So another thing about coffee can says that every stock should have weightage. Every weightage should be the same. Okay, similar, same amount. So I basically got around 22 stocks. quite quite deep, I must say. Oh, quite deep, I must say. And I transported them into mid-level guys, and I'm trying to make that differentiation. But basically, this is the entire portfolio, right? Now, what I did was I also went downwards. I added a few stocks which are not in coffee can. Uh, like for example, Happiest Minds didn't come under the coffee can, but I put it because I believe in it. So this is my coffee can. By the way, Rosari Biotech was beautiful, man. I don't know why I didn't see it properly in the past, but look at Rosari Biotech's profit and loss. Beautiful, right? Quite increasing, good margins increase, good revenue increase quite nicely. Even the EPS is net profit is going up constantly. So Rosari Biotech came into that screener. So when I reduced the universe, right, it came Amrutanjan also came in that universe. When I reduced the universe means, look at this, right? In the last 5 years, Amrutanjan's doing quite significantly well. They also have a moat, and now they're diversifying into different industries. They've got their everything's going up. Everything's going up slowly. Again, this is for 10 years. It's not right now, and their reserves are good. No borrowings. So that is why. So basically, it's Happiest, Rosari, AU, Avas, Amrutanjan, Poly Medicure. This was doing. It's already doing really well. DMart, LNT in LNT Infotech. Have you seen this? I mean, this is a big company, 87 crore market cap company. But look at the sales, right? Apart from 1 year, every year they're growing more than 10%. Their EPS is just shooting constantly. That means shareholder return will be there. So if I just do max holding, look at this, has to be good. That cannot not be good, right? Now, for people, what is the thing not clear? I'm pretty sure it's clear. Okay. Uh, yeah, Amrutanjan is from Ish Mohit's universe. It also came up in my tracker, in my screener. Now, look at all this, right? So many companies have come up in the screener here as well. So, now, some of them I've removed, some of them I've kept. Deepak, I've not, see, I've removed stuff like Deepak, Tata, Alexi, and all have come also. But I have removed, no, I have removed Deepak and Tata Alexi because that I'm investing in my core portfolio and I've got enough of all this. So Laurus Labs, Deepak, Tata, Subex, all that is separate. This is coffee can. That is not coffee can, right? Now, if you look at the other ones, then there's HCL, which is quite safe. Kotak Mahindra, very safe. Alkyl Amines, Alkan Labs, Persistent Systems. Alkan Labs also is doing really well. Dr. Lal Pathla, Ajanta Pharma also is doing really well. Again, pharma boom is over, but I don't care about the boom because I'm looking at what last 10 years increase of 10%, right? Apart from this 1 year, which is pre-COVID, every year it's given damn good returns and the EPS is growing really well and everything looks damn good. Look at the reserves they have. So all these are your, basically I don't even have to do anything. I'll just click on max chart, look at the last 10 years data. If I had invested in 2011 at 31 rupees, am I profitable? Yes, I'm profitable. Done, finished. That's it, game over. I don't need to think too much about it. So that is what this happens, right? This is basically what it is. Now, I mean, it's very expensive. Now, there's one more company called GMM Florida, which is not given good returns, but also is doing really well. I don't know. It's a little confusing. I've kept it now, but I've invested in this, and I'm going to leave it for. I'll try to leave it for 10 years. Hopefully, it's possible. If it's not, then sadly, I can't help it. Right? I'll try to leave it for 10 years if it's possible. If it's not, then I can't help it. I'll have to remove it. But this is what it is. So, for all the people who wanted to understand, for all the people who wanted to know what coffee can is, this was basically a gist of it. First, you need to make a financial plan, understand how much return you need to give. You guys want the link? Okay, 1 second. 1 second, let me give you a link. Again, this is only for educational purposes so that you can go and watch it. Don't come and irritate me later on because a lot of people have that ability to come and irritate me. So let me put that link right now. Coffee can link. Okay, I'm updating it down in the description so you can have a look at it. Okay. Actually, इधर भी डाल देता हूँ ना. Okay, I'll put it up here also on the chat. So again, don't irritate me later on. This is, I'm just showing you for educational purposes. बाद में मेरे को पकड़ो मत, etc etc. Let me post it here. देख लो एक बार. Yeah, so you guys have a look at it. This is my universe. I mean, this is what I checked. It seems logical because the stocks are good and it all looks fine. So it seems logical. Can we reduce weights? That goes against your coffee can principle. You cannot reduce weights, but you can remove stocks. right? You don't have to keep the same. So for example, you can actually remove some of the stocks that you don't want. For example, I would not want to keep HCL because it's already 1 lakh crore, 1 lakh market cap, right? 1 lakh crore market cap. But I'm just keeping these two companies, HCL and Kotak Mahindra, to give that balance in my portfolio. Even DMart has gone up so much, but I'm just trying to keep it for balance in my portfolio, right? Aurobindo Pharma was it there? I actually had it in my screener. I think I removed it. Not sure. Uh, I'm not sure why. Because I did a full massive research. Oh my god, just look at this. Poor Aurobindo Pharma. I wanted to invest because it ticked off most of the boxes. See, it was going good growth, good EPS growth, everything's going well. But if everything's going well, then why is it dropping quite significantly? And it didn't make sense, and it's also been stagnant from the last few years. I like consistent growth. Yeah, Abbott is quite big, right? So you should not reduce weights. I would say reduce the stocks. Don't keep so many stocks. Abbott is something that is good. Yeah, yeah. Look at Abbott, huh? 40,000 crore market cap. Current price is 18,000 bloody rupees. Last 10 years, it's given some incredible growth, right? If you look at the results, good consistent compounder, right? And if you look at EPS growth, look at the EPS growth, mad. Also, what Saurabh Mukherjee talks a lot about is Page Industries. I didn't put it now because I should have. Actually, I can still include it. But Page Industries is something that they looked at. Look, look at this. Look at how this is. But last 2 years it didn't do well. But look at apart from that, right? Beautiful compounder in the last 7-8 years. Beautiful EPS growth as well. Even this year, slightly good EPS growth. Good reserves, good ratio. Look at the ROCE ratio, 60% ROCE ratio, and promoter shareholding is this much. Actually, you can even do this, right? Try doing this. Okay, let's try something. Okay, I'll remove this, remove this, remove this, remove this. Let's try if you do 50% ROCE growth. Okay, and let's remove this entire universe to 0, and let's make this whatever unlimited, right? There are 24 companies that are giving a 5-year. Wait, what did I do? Why did I keep ROE? Ah, no, I need ROCE. Sorry, my bad. Let's try something, okay? From I want 60, 50, 40%. 40% is like quite high. Okay, okay. Maximum is 31 apparently. Okay, maximum is 31 in this universe. Let's keep. Okay. Nah, so sad, no? Maximum is this Sonata software. Cams is giving crazy ROC apparently. So you can try that. Actually, you can even try here, right? If you do a new screen and just say I want ROCE, I want ROCE 3 year actually average return for last on the last 10 years capital employed greater than 40%. Let's see. 29 companies are giving. Nestle is here. Okay, Nestle is here, PNG Hawkins, IEX, Easy Trip Planners, Kanchi Karpuram. Look at this. You explore Tata Elxsi is giving good ROC. So automatically you see there are some good stocks, but again there is no shortcut to this. Pura karna padega by one. Huh? There's literally no shortcut to this. Sorry about that. So again, this was what Subex won a multi-year contract right now. So that's why I said don't stress too much. Let's see if the fundamentals go bad. They say that if you get lost, it's fine, leave it because the profitable ones will do well. So let's see what happens. Again, hope you guys understood. This was basically me. I was just feeling spontaneous, so I said let me come and show you. But yeah, I think I'll make a proper video on coffee can investing. But this should give you basically the entire premise of the entire video, which talks about everything, right? So you can have a look at it. Feel free to do whatever you want. But the market is anyway slightly boring right now. For all the people who have seen it right now, it's slightly boring. Not much is happening. It's not moving too much. I'm pretty sure you guys are also slightly bored. But don't worry, this is not the weekend research. Weekend research we will do properly on the weekend on Sunday. And also this Sunday, guys, I'm going to announce the results of the giveaway and I'm going to give stocks worth of 15,000 to all the people. So if you have not subscribed to the giveaway, I'm sad for you. But please do that. Yes, 4.5 lakhs to one go. The link redirects to Play Store. If you don't have the app, it will redirect you to the Play Store. So download the app. If you have the app, then it will directly go inside the app and save it as a draft. Mostly I'll be doing it on Sunday. Weekend research on Sunday. I'll set it up. So we'll do it today. On Sunday we'll have fun. Right? Today was just a quick time pass thing I want to come and talk to you guys. Hope you guys loved it. Hope you guys liked it. 373 people watching it live. So awesome. Sunday we will do. Okay. So please keep educating yourself. Read the book if you have not read it. By the way, it's available online for free also. So if you're smart, you'll figure it out. Awesome. Give us more details about the money workshop. It's all there on Instagram. Just go to Avalon Scenes Instagram and check it out. Everything is there. It's going to be an amazing workshop. So book your seat, or else you won't get to be a part of the workshop, right? So please book your seat. It's free, but you have to pay 99 rupees, which will get refunded later on, because a lot of useless people come and just directly jump into it. Awesome. Chalo. Awesome, guys. See you. That is me, Shashank Udupa, signing off today. And go please watch that health insurance video as well, because it took time, effort, and energy to do this. And I didn't premiere it and nobody saw it, right? So that means nobody's clicked on that notification button. I will book a barber and do it this weekend. Thank you, guys. You will see me in a very fuck all haircut, looking really bad like a kid. So वो सब मैं करूँगा. I like this long hair Shah Rukh Khan vibe look. So yeah, but I'm gonna make it quite short. Okay, so don't worry. See you. This is me, Shashank Udupa, signing off. And hope you guys have fun. Okay, chalo, bye.